Mortgages are about to get a lot more expensive. And in my opinion, house prices will not come down far enough to compensate for the difference in your monthly payment. So in the housing market, particularly here in Surrey, BC and the Fraser Valley, we should expect that our payments will increase. So guess what? It's your responsibility as a homeowner to make sure you're not putting yourself in a bad spot. And in today's video, I'm going to share with you the strategy that I started using as young as 25 years old to pay down my mortgage faster, without feeling like I had to scrimp and save every single penny to do so. And all I ask in return is that you're not stingy with the like button for the YouTube algorithm. Because you see, the more good little savers that click that like button totally for free, well, each one of them helps get this message out to even more people who will then be able to pay off their mortgages faster. And that alone may save the Canadian housing market from the doom and gloom that is likely coming with further price declines. And of course, if you would like to stay up to date on my market here in Surrey and the Fraser Valley, please make sure you subscribe to the channel. And if you need to sell before 2024 because Oxford Economics is predicting a decline of up to 24% over the next 2 years, well, you can book a call with me right now down below in the description to talk about selling your real estate at a time that works best for you. And now on to the trick that I use to outsmart TD Bank. Well, okay, it wasn't a trick. It was more like personal fiscal responsibility, but who would click on a video about that? So first I wanted to start with the results. You see, I bought my first ever condo near Guildford Mall in Surrey in the spring of 2005 when I was only 24 years old. At that time, I was able to purchase a 2-bedroom, 2-bathroom, 800 square foot condo for under $140,000. When I bought, I took on a 25-year mortgage, but what do you know? I only lived there for 4 years. So in the day I moved out, I should have had 21 years left on my mortgage. However, as a result of doing what I'm going to tell you about here today, there was only actually 11 years left on the mortgage the day I cashed it out. So magically, I was able to make 10 years disappear on my mortgage with this simple trick. Are you still with me? Now, I know you're going to be shocked, but my mortgage in those days was at 4.86%. And if I remember right, and I probably don't, after paying CMHC and putting down 10%, I want to say that my mortgage payment ended up being somewhere around $660 a month. So that means at that time, every payday that came and went, I paid down my mortgage about $305 because I did it on every second Friday, meaning there were 26 pay periods in the year. At that time, I think I was making about $17 an hour back when I had a real job. But now here, as promised, is the trick. Very soon after moving in, I received a raise at work. Let's call it $2 an hour. Or in a full work week, $160 a check. Now, what do most people do with a raise? Well, let's face it, they usually increase their spending habits. Maybe they go on vacations or even invest. Well, I'm not gonna lie, I did those things too, but I did it by less than half. And let me explain. You see, that first day I got my raise, I walked into TD Bank, because back in those days, we used to deposit our checks at the branch, and I asked the teller to help me increase my mortgage payment by 50% of my raise. That's right, not the whole $160. I'm not telling you that the cost of living and other things don't go up. After all, I didn't want to be house poor either. But I did ask them to increase my mortgage payment by half of my raise. So if you do the math, my payment went from $305 every 2 weeks to $385. Probably at that time, about $30 of that check went to income tax, and that left me behind with about another $50 every 2 weeks to spend on whatever I wanted. And then something crazy happened. About a year later, I got another raise. Year after that, again. So by the time 4 years later that I was ready to move on to the next property, I was already used to paying $1,000 a month for my mortgage. This did two things. One, I paid down extra principal on the amount owing on my mortgage. And at the exact same time, as a result of that, it means that I paid less interest, putting me in a position to move on to my next property even faster than if I had just saved the money in a bank account. And two, it got me used to paying a higher mortgage payment, which I knew I was going to need to do when I got on to my next property. So when I got into my townhouse and I took on double the debt that I had before, I was already used to the higher payment, and it really made no change to my lifestyle at all. And it made the move a ton easier. The best part was I still spent about a quarter of that raise on whatever the heck I felt like. So I never felt house poor. Now, I know you're going to say,
House prices are so expensive. There's no way I can have anything left over.
well, if you're telling yourself that, you're giving yourself an excuse to not be fiscally responsible. Yes, today you may be scraping by due to inflation and the cost of housing increasing, but this example doesn't refer to today and what it took to get into your purchase. What I'm saying is to try this practice when you get a raise, or if you switch jobs into a higher salary paying position. And sure, spend some of that raise now that gas costs $2.29 a liter here in Surrey, but put 50% of it before tax onto your monthly mortgage payment, as long as you got a good mortgage and your lender will allow you to put down the extra payments. And no matter what, if you do this with each pay increase that you get over the years, you will put yourself in a position to be mortgage free sooner or to move to your forever home faster. And well, if your move is going to be really, really soon, you can book a call with me right now down below in the description with just a few simple clicks at a time that works best for you. If you're a real estate agent and you are interested in introducing video into your business to provide your clients with more value, you can sign up for the video real estate course down below in the description and use the checkout code STEVE10 for 10% off any purchase. Please subscribe and remember to click the like button for personal financial responsibility. Check out another video before you go, and we'll see you in a couple of days.